So we are starting with tax registration in Uganda following our previous training on tax agency. We were able to go through the issues regarding tax agency in Uganda, the steps you will take in registering your tax agency, and then how to get clients, and also other ways of serving your clients besides being a tax agent. So today, we now begin on your different functions, what you're going to be doing. One of the things you're going to do with your tax agency is registration of taxpayers. This is one of the duties you are going to take on behalf of URA to support the effort of bringing as many taxpayers on the tax book as possible. So we are going to go through the process, how it is done, how much you're going to charge, and why you should do this. So the session will cover the tax registration procedure, the requirements, and the benefits. The taxes imposed when the taxpayer becomes registered, the taxpayer's charter, and then changes in registration details, including the fines and penalties with registration. So as most of you know, the mandate to register taxpayers in Uganda is with URA. They have that mandate to ensure that taxpayers are registered and they are recognized as eligible to pay taxes or to benefit from the registration of taxes. So the URA body will issue each taxpayer a 10-digit identifying number, which is the TIN. It acts as the taxpayer's personal account with URA. It is, again, a legal requirement, and it applies to all taxpayers regardless of their tax transactions. So this is important to you as a tax agent because there's no way you're going to help a client when they are not registered for tax. So work on someone, but ensure that they have that 10-digit identifying number, that TIN. So what's the procedure? Assuming a client comes to you and they want to be registered for tax. So step number 1, you will visit the URA web portal, which I'm going to share here. Step number 2, you download the appropriate registration form, individual or non-individual, depending on the client that you have. Because now your clients are divided into 2. You will have those that are individual, and then you have the non-individual clients. Then after downloading the appropriate form, you complete the form by filling in the mandatory fields or the boxes. You upload and submit the online form, the completed form, and then you print out a copy of the form, sign it off, together with the necessary attachments, submit to the nearest URA office. You get an acknowledgement notice of approval of the TIN. Now, this is the traditional way of registering your client for tax. However, as you have been able to notice, there are improvements in the registration of taxpayers process. Now the process is instant for individuals. It is instant and web-based. Today, you may not need to go through the downloading and uploading and all that. But as a tax agent, you need to know whatever URA does must be in the law. It must be according to the law. Lawyers can one day wake up and challenge that instant registration of taxpayers. But it is also available, and also this one is the one that is recognized in the law. That a taxpayer will visit the portal, will download the form, will fill it in, will sign it, will submit the requirements, and will receive an acknowledgement notice. So, whichever way you want to do it, you should be able to receive an acknowledgement notice as approval that your client has been registered for taxes. So some of you are here and you are not yet registered. You need to register, and you can do that as a task arising out of this session. So let's now take a look at the steps. On your screen is the screenshot of the URA portal. That's how it looks like right now. The URL, step number 1, you put in www.ura.go.ug domestic taxes. So domestic taxes is that special page where there are links that will take you to the registration page. So you select the domestic taxes from the main menu. It will be a drop down. It will come. Then you click on Get a TIN. Okay, Get a TIN to access the online registration forms. You click on that. Then when you click on that, all these screenshots, I'm going to share them. They are yours. When you click on that, you'll be taken to this page where you have to be specific. The client you're registering, is it an individual client? Is it a non-individual? Non-individual includes companies, partnerships, basically anybody who is not working in their own capacity as a person. So depending on what you want, you click on that, you'll be taken to this other page. There's a page which looks like this. It's still like this. There are no changes. You still find it like this. So assuming we want to register an individual, you click on the individual on the vertical menu, and then you have this page where there's a provision to click and apply for the individual TIN. These are all web designs. They can always change, but we are maintaining the standard way of doing it. So there must be a provision to click, and of course, you'll be taken to this page, which has several templates for you to complete. So if it is individual, non-individual, you still have these templates. So you click on any of the templates. For instance, if you want to register a non-individual, this is the page where you'll be taken. There is a TIN non-individual template. You'll see the different annexures. Annexure 1, gaming tax. If your client is going to deal in gaming, then you also need to download Annexure 1. If your client is interested in having taxable supplies where VAT is charged, you'll also need to download Annexure 2, complete it. If your client is required to register for excise tax, excise tax, there are specific people that pay for that. Excise tax is on specific goods. Especially the people that are into manufacturing. if you're into manufacturing, like even the banks, excise tax is also on the transactions. If you look at your bank statement, you see that charge, very small charge, but if you add up, it's a big one. So if you want to register your client for excise, you will have to download Annexure 3. Then try to find out from your client, do they have a branch? Do they have additional business? There is Annexure 4. There is Annexure 4. Then, is your client interested is your client going to deal with oil and gas? There is Annexure 5. So you can do all this at once, or you can first submit the T9 individual, complete that one. Then these other ones, you can always do the amendment. You can always upgrade. You can do it, but it's better you do it at once so that all the questions are answered. So try to exhaust all this. When a client comes to you, try to exhaust all this. Gaming tax. Do you have taxable supplies? Like, are you going to, like, for instance, mineral water is a taxable supply. You cannot deal in mineral water when you're not registered for VAT. If you're going to supply mineral water, a VAT, and many other, of course, services, like the lawyers, they have to be registered for VAT. Legal fees are taxable supplies. The consultants, yourselves, you must be registered for VAT. The accountants, all those services. So try to exhaust. When a client comes to you, do a good job. Understand what they are going to do. Do they have branch? Are they going to oil and gas, excise tax, VAT, gaming? Look at all these things. So if everything is done and everything is okay, you come back to the same page and then you upload the completed form. So the general requirements, what you're going to ask your client to present, include an active email address, mobile telephone. If the client is non-individual, then you might need national ID for the directors, individuals. You have all these things here: valid national ID, village ID, employment, any of these. Non-individual, usually the questions I get, if a company is to register for taxes, are the directors supposed to be registered? The answer is yes. There's no way you can register the company for tax if the directors are not registered. It's not possible. I've had one client who was convincing me that it's actually possible. I don't want to register for taxes, but I want to register my company. It's totally not possible. You must have a team yourself as a director. Then you must have registered your company. You must be having a certificate of incorporation, certificate of registration, company form 20, and many other documents, of course, that might be required. Okay, on the screen is the acknowledgement receipt. When the company is registered for tax, the submission has been made, you're going to receive this email acknowledging receipt of your registration particulars. So all these things are yours. I'm going to share them. Now, of course, some of the reasons why, because some clients may try to be so adamant they don't want to register for taxes, and so these are some of the benefits. There is no way they can export goods within and outside Uganda without a tax identification number. They might find themselves, they want to claim benefits like tax refunds, they need the TIN. Access to bank loans amounting amounts above 50 million, they need a TIN. Acquiring a license from government, TIN is, you're supposed to have a TIN. Registering the motor vehicles of the company. If you want to register your vehicle as an individual, non-individual, TIN is required. Now we have land transactions. You cannot complete a land transaction if you don't have a tax identification number. So these are some of the things that you might, of course, want to educate your client so that they appreciate the importance of having that TIN. Next, we are going to look at the taxes that are going to be imposed on your client when they become registered for taxes. Let me share that. Let me share that slide here. Taxes imposed on registration. So upon registration, the following taxes, let me share this. The following are some of the taxes imposed upon registration. 1, income tax. We are going to look at that. That's part of the scope of our training. Value added tax. We are going to look at that. Local excise duty. We shall look at that. Gaming tax. So many people now that are in gaming, so you can also check out those clients. So the taxes imposed and effective date are indicated on the taxpayer's tax registration certificate. Remember last time I told you that each client that's going to come to you, make sure you open a file for them. The very first document that you will have on file of your client is this one here, the certificate of registration. Make sure that the client you have taken on, you have their certificate of registration. This is going to show the effective date. Section D of the registration certificate shows the effective date. That's very, very important. The effective date. For instance, as you can see this client here, the TIN non-individual effective date was 5th of July 2013. Motor vehicle effective date 5th of July 2013. Payee effective date 1st of July 2015. You can imagine. Income tax effective date 1st of July 2014. Value added tax effective date is 1st of March 2018. So the effective date is the date when the returns are supposed to be filed. So effectively, payee returns, yes, you are registered in 2013, but the payee returns start to come in 1st of July 2015. You start sending them 1st of July 2015. So why that gap? Probably the client registered for taxes in 2013 and started maybe business in 2015. So that could be the reason. Then you can see VAT came in later. You know, you have to qualify, as we are going to see in the training, you must qualify to charge VAT. So maybe later, after maybe having so many transactions, the client now became eligible to charge VAT and file returns. So this is the first document. Okay, not the first, but one of the first documents you must have for the client you're going to work on. Make sure if they are not registered, of course you register them and have it. But if they are already registered, the first thing you have to ask for is the certificate of registration. And that's the reason why you came for this training. We want to show you the right way of doing things so that you don't get into problems working on a client who is, working for another person. You're going to get such people. The person is a broker and is using you, So make sure everything is transparent. You come to me, you want me to work on you, get me your certificate of registration so that I can see things clearly. Some of the problems that clients are going to bring to you will be problems of not observing the effective date. Someone is running to you, they're in areas, the effective date, they're not even giving you the right date. You get it? So you're troubleshooting a problem, yet some information has not come out well. So get the certificate of registration. Look at it. When were they supposed to file? Did they file? What are you dealing with? So this is part of the registration process. Then there's what we call the taxpayer's charter. That's also important for you as a tax agent to know that URA has a taxpayer's charter, which is derived from the tax laws and regulations. This charter spells out the rights and obligations of the taxpayer. It also guides URA in upholding these rights and facilitates the taxpayer to meet their obligations. The taxpayer's charter acts as a reference point for the taxpayers in managing their interaction with URA and provides the tax body with the necessary benchmark for its client service standards. This is done by recognizing its clients as a viable partner in the administration and collection of taxes. This guarantees a meaningful relationship between URA and the taxpayer. So do not get so worried because of this and that. There is a charter and everybody has their obligations and rights. So what are some of the rights of the taxpayers? One, right to fair treatment. This is your right. If you didn't know, now you know. Right to finality, right to privacy, right to confidentiality, right to be informed, right to timely, quality and professional service. Okay. Right to representation, right to challenge, object, right to appeal. So don't get a sleepless night because you are has sent you a strong letter. Within 14 days you must do. No. You have rights. You have rights. You get it? So the right to representation, you have that right. If there is something coming from URA and you feel it's not fair, you can object it. If there is a decision that has been arrived at, you can still appeal. That's your right. So this ensures that taxes don't stress. Though some people just want to take it that tax is stress and you have to have a sleepless night, you have to worry, you have to panic. No, you don't have to do that. So you have your rights, but again, you have obligations. You have obligations. One is the tax registration. It's your obligation to register. You must keep proper books of accounts, records. You must file the returns. You must pay the taxes. So if your client comes and the problem is not meeting the obligations, then that's their fault. Because you must, when you come to me, I tell you it's your fault. You didn't register. It's your fault. You didn't keep proper records. You didn't file the returns. You didn't pay the taxes. You're engaged in tax evasion. You're not compliant. So all these are your obligations. Yes, you have the rights, but you're obligated to do the right thing. The obligation to update your personal information. Due diligence in tax matters. Be respectful to your staff. You have been seeing on the social media, this lady was slapping the traffic policeman. You can't do that. You can't do that. Even if they are lowly people, you cannot just slap a person like that. So if a URA staff has come to you, to cooperate, respect them. They should also respect you, by the way. It is your right to be respected and given information, to be informed of any decisions that they have taken. They must do that. So we shall be looking at all that, dealing with authorized staff. There are you may have someone in URA, but is this person authorized to do certain things? So do not make people do things they're not supposed to do because they are working with URA. Quote your team. The need of an interpreter. If you don't understand the English they are using, you can always have that one. That's your right. So, of course, the bookkeeping and records, you should ensure that your clients manage the books of accounts. It's their obligation. They are required to keep proper records of all business transactions in English language, by the way. In English language, because the commissioner, according to the tax law, the commissioner can only understand English. Eh? So don't keep your records in your local language and then you begin, it's my right to keep in. No, no, no. English language. Okay. And if you keep your books in your local language, the tax law requires that you hire an interpreter to interpret for the commission, because the commission does not, when I say commissioner general, it's any person in URA. They do not understand your local language. So you must get an interpreter. It is recommended that records should be kept for at least 5 years from the end of the tax period to which they relate for future reference. Again, these are going to be some of the questions. These are going to be some of the questions coming from your clients that can I throw away these receipts? 5 years minimum. Yeah, make sure the records are there because anytime URA can query a return, they can even go back 3 years ago, they query a return. Is there a scenario where someone has more than one tin? No, 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 no. A tin is a unique digit. It's a unique number. Unique. You can't have double. There you'll be a fraudster if you try to get more than one. Though it is possible that you can register today, then it fails, then they issue, then you register another. It can happen, but you have to ensure that if you have double, they have issued two numbers, you cancel one. You cannot have two. Where a record is not kept in English, the taxpayer will be required to meet the cost of translating into English by a translator approved by the commissioner. However, the tax returns and other correspondences with the commissioner must be in English. So these are some of the questions. You're going to meet all these clients and you must be very, very clear with how things are done. Can I change the registration details? Yes. You can change the registration details. It's your obligation to communicate to the commissioner if there are any changes in the particulars that you submitted when you're registering. So this is another function you can help. You can help. Especially these people that run my office, by the way. I've given them that is their money. They register people, they help in changing registration details. So that is money that can run office. You get it? Small money, don't overcharge. So changing registration details is your obligation. And each time you see that your client's registration details have changed, it is now your role as the agent to inform that we need to update. So here we are saying that all registered taxpayers are required to update their registration details using their accounts on the URA website, or through submission of a signed manual amendment form to any nearest URA office if they fail to access their accounts online. This must be done as soon as the amendment is made in the registration details. This will enable timely and accurate dissemination of correct information to the parties concerned regarding the taxes whenever need arises. Reasons for change. Some of the registration amendment indicators include errors in registration details. You could have made an error. Yeah. Maybe the plot number, you had put 57, yet it is 48. So you can amend that. Changes in ownership, directorship of the business. Directors keep on changing, retiring, and all that, resigning. So you have to change. Change in the location or nature of the business. Change in business contact or contact person details. Changes in registered tax types, and so on. So if all these happen, you need to do the amendment. So how do we do that? So currently you go to the URA portal, log in, the client will give you the TIN and the password. Then you move to e-services. Now you've logged in. This is a logged in page. Okay, it's a logged in page, active logged in page. So you'll see that there, again, as I mentioned, these are web designs. This is how it is designed right now. So it can change. So if you open and it has changed, they have changed the design, but the standard remains the same. So for now, you will make changes under e-services registration. So when you click on that, when you click on registration, you will get drop down pages here, a drop down where we can make the amendments. So you can see when I point my cursor on registration, I get a drop down. I have two options. I want to amend, maybe update the TIN information, view amendment history, create sub account for the branch, or tax agent. Okay, I want to register for tax agency, renew tax agent registration. So that one is now for tax agents. You again also be doing yours there. You can register for tax agency, renew your tax agent registration. You can deactivate your tax agent registration. You can pay for the tax agent license. All that is done under registration. So now we are looking at the client who needs to amend their registration details. So you have logged in, you have pointed your cursor on registration. Now you go to update TIN information. So when you click on update TIN information, it should be able to take you to this page, a web-based form. This is a form with pages, page 1, page 2, page 3, schedules, gaming tax, VAT, excise. So you can amend. Okay. So what do you want to change? Is it the registration? Is it the name of the business? Is it the branch? It depends now. Your choice. There are so many fields here. We cannot go through all of them. I just want to inform you that the registration details can be amended. Okay. So you keep on changing whatever you want to change. Keep on clicking on next. If you want to change the maybe the building location, there was a shift in the offices, so you can change the district building name. Okay, and then at the end, the very last page I think is oil and gas. Then you submit. So you submit online, and when you submit, of course, in some cases they may have to review. Okay, to see that these are genuine amendments. And if more information is needed, you might be contacted. So this is how you can do the amendments. Someone is asking if there is a place where you can view previous tax payments. Yeah, of course, of course, of course. We are going to do all that. That's why we're here. We are going to show you everything. All right, fines and penalties. Penalties and offenses under registration. So we are saying that the penalty for a person who fails to apply for registration or cancel registration or notify the commissioner of a change in registration. So these are I hope these are still the ones, the updated ones. So the fine is not exceeding 3 million or imprisonment. You have to look at the current. You have to look at the current. They keep on changing these. Okay, they keep on changing them. But for now, at the time of this training, a fine not exceeding 3 million or imprisonment not exceeding 6 years or both on conviction if the failure or act was done knowingly or recklessly. A fine not exceeding 1 million, or imprisonment not exceeding 2 years, or both on conviction in any other case. That is now for a person who fails to apply for registration, cancel registration, notify the commissioner that there were changes in the circumstances. I shifted from Muntinda, I went to Mukono, but I did not inform you. This is the fine. So some clients think it's a joke. Okay, the law, it may not be so vibrant or so much out there that this one was fined this one. It is there. It is in the law. Okay, it is in the law. Penalties offenses for use of false use of tax identification number on a tax return. That's why I was saying that please, if you're working on a client, get the certificate, get a copy. I cannot start on you if I don't have your certificate of registration. So I don't want to mess around, because a person who uses a false TIN on a tax return or other document prescribed or used for the purpose of a tax law, knowingly or recklessly, or not, commits an offense and is liable on conviction to a fine not exceeding 3 million, or imprisonment not exceeding 6 years, or both. The penalty for knowingly or recklessly or not failing to maintain records as required under any tax law is a fine not exceeding 2 million, or imprisonment not exceeding 6 years, or both on conviction. You see that? Yeah, that's how things are. And people don't know that these things are happening. So you just open a business and do your things the way you want. You don't paying taxes. This is what's going to happen. So the penalties and offenses, as you can see, are really they don't look nice. These are not nice things. So you have to ensure that your clients follow and do things according to the law. Next, we move into the return types. I'm going to take you through. Keep dropping the questions in the chat. I'll be picking them up and of course answering as we progress with our session. So we are going to move into the tax return types. Now we assume you've successfully registered your client. Okay, you've registered your client has a tax identification number, and you're good to go. So income tax returns, I think we can start with that. The income tax returns, let me share my screen. How much should I charge for registration? You can even do it for free, because it is free, first of all. But don't charge people that you have to pay this TRA. Registration is free. So the fee you're going to charge to register, of course, it's okay. You can charge because it's a service anyway. It's going to depend. It's going to depend. Some people charge 50,000, others charge 100,000. Others now, if you need all the other documents, excise tax, VAT, you can even charge 500,000. So it will depend on the taxes. So that one is on you. You will see and judge. Income tax returns. A tax return is a declaration in a form prescribed by the commissioner. A return, what we refer to as a return, is a form that the commissioner has designed, developed with fields, issued to the taxpayer to declare and determine taxes. So this form, the taxpayer reports his or her income for the tax period as a way of self-assessment. That's the beauty with tax. You self-assess yourself. You will declare, I earned 2 million, and on this 2 million, I'm not going to pay you. So you file a new return. Then you say, I earned 2 million, And on this 2 million, what I can see is 100,000 for you. You self-assess yourself. You get it? You self-assess yourself. Okay? Tax period. We have talked about a tax period. A tax period is the duration for which a return is required. Some returns are needed on an annual basis, others monthly, others weekly, as we are going to see. So it is important for you as the agent or consultant of the client to know when this return is supposed to be taken to URA, supposed to be sent to URA. It is important. Don't miss these deadlines. These deadlines are also not good to miss. Due date. A due date is the deadline for filing a return beyond which a person is required to pay a penalty. Yes, you can self-assess yourself, but don't take the entire year self-assessing yourself. There's a deadline. Okay? Say, I'm still self-assessing myself. I'm still self-assessing. My friend, there's a deadline. There's a deadline, and you must go by the due date. Furnishing of the return. A taxpayer registered with URA for any tax type other than payee has an obligation to submit a return for the tax period defined by the respective tax law. You see that? You have an obligation to submit. Other than pay is squarely on your employer. That one, the employer will suffer. Whether they don't go by the deadline, they go by the deadline, that's not your business. Pay. But the rest is your business. Okay? It is your business, your obligation to ensure that you submit by the due date. URA has facilitated the taxpayers to fulfill this obligation by introducing the e-tax system, e-filing, electronic filing of tax returns. So what are these return types? I'm sharing this again. You have a copy of these screenshots to guide you for those who have not done it before. So you go to the URA portal, www.ura.go.ug.en. You go to domestic taxes, click on that. You'll get this drop down, click on file a return. You'll be taken to this page, click on download online return forms. Now I'm going to start by talking about the online because we know there is a shift from online to web-based. Goes back to what I mentioned, that this is what is supposed to be done under the law. But URA has kept on improving on the systems. So you may find that most of these things are going to shift and they're going to be web-based. We are going to go through the online, then we shall identify those that are now web-based and how it is done. Shifting from standalone downloaded forms does not mean that shifting from these standalone forms to web-based does not mean that the fields have changed. The fields are still the same. Okay, so the sections are still the same. So it is just a changeover in the accessibility. Now you could download and access as downloads, but now you have to log in and access a web-based. So if you click on download online return forms, you'll be taken to this page and you'll have a full list. You're going to go through all these because this is now your work. As a tax agent, you're going to be filing this. Number one, we have DT 2001. This is a final return for all individual taxpayers. Individual taxpayers are supposed to file this return, DT 2001, and submit this return for each year of income not later than the 6th month after the end of the year of income. For example, if a client comes to you, Mukasa Ronald, a businessman, you're going to file this one for Mukasa Ronald. Okay? And if his financial year is ending 30th of June 2023, you are required to file this return, submit, before 31st of December. So you have 6 months to self-assess yourself. You can imagine 6 months to self-assess yourself. So clients in the category of individual with businessmen, businesswomen, file this one here, DT 2001. We shall be seeing the details of that return. Number 2, we have DT 2002. This one is a final return. I'll make a distinction between final and provisional. This one is a final return for who? For all those clients that are going to come to you in the capacity of a company. You see that? In the capacity. Now, it means that you as a tax agent, it is also important to know the nature of the client you're handling. Are you a company? Are you an individual? And some clients are going to come to you and they confuse you. You see, sometimes I work as an individual. Sometimes I work as a company. You have to be clear. Because if you're not clear, you're going to make me file a wrong return. You see that? So DT2002 is the final return for all non-individual taxpayers, companies who are supposed to file and submit this return. Okay? Yes, 1 tin for all the branches. 1 tin. 1 tin. A single tin. Don't get a tin for Mukono branch has its own tin. Then don't do that. So all non-individual taxpayers are supposed to file this one here and submit it for each year of income, not later than the 6th month after the end of the year of income. I'm giving an example here. If ABC Uganda Limited operates a financial year ending 30th of June 2023, ABC is required to file and submit this return before 31st of December 2023. We shall be talking about substituted year of income and the fiscal year of income. We shall be talking about that one later. For each of the returns, we shall be, painting a picture. If it's substituted year, if it's the fiscal year, what's going to happen? Number 2, we have DT2003. This one is a provisional return. Provisional. So again, we need to understand what is the final provisional. So this one here is for every individual taxpayer. Okay? So clients that are going to come to you in the capacity of an individual. So it means this one here is the brother or sister of this DT2001. You see that? This one. There's two DT2003 and then DT2001. So it means that provisional is DT2003. Final is DT2001. The individual has business. Now, provision is supposed to be, the provisioning is supposed to be done before the last day of the 3rd, 6th, 9th, and the 12th month of the year of income, in respect to the individual's liability for a period of 3, 6, 9, 12 months. So what's going to happen is that you will have to charge your client at all these stages after 3 months, 6 months, 9 months, 12 months. So when you're billing, bill properly, because you must follow this. So you can simply spread the bill for the year into 1, 2, 3, 4. So that you get that money at once, and then you do the filing. Keep the questions coming in. I'm going to read them at once. Number 4, DT2004. This one is a provisional. This one is the sister or the brother of this other one, DT2002. Because that one's the final. Then DT2004 is now the provisional for non-individual. Non-individual taxpayers are required to furnish a return of provisional tax estimate on or before the last day of the 6th and the 12th. Now, this one you're going to do it only 2 times for the company, 2 times. 6th, 12th. But the 12th, of course, is the final. Okay? We shall be seeing that. We are going to file all these ones. This is why we are here. We are going to file all of them. Okay? Live here in class. Next is the income tax return for a partnership. Now, you remember you're going to get clients who are in a partnership, like most of law firms are all in a partnership, audit firms, engineering firms, the all workers partnerships. So those ones who are going to come to you and they are running a partnership, you're going to file this one. Every partnership is required to submit a final income tax return, DT 2005, for each year of income, not later than the 6th month after the end of the year of income. The category of taxpayers include law firms, audit firms, engineering firms, among many other enterprises that operate as partnerships. However, you should know that a partnership does not pay taxes. We shall be discussing that. A partnership does not pay taxes. It's only obligated to file a return. It ends there. The taxes on the partnership are paid by the partners. Okay? The taxes are paid by the partners. So you can work for the partnership, and then if the partners want you to work for them, you can also work for them. Why not? Next, we have WHT, withholding tax return form, which is a monthly return. A taxpayer is required to submit a return DT 2006 in respect to the withholding tax due from the suppliers or service providers. The declaration must be done within 15 days from the end of the month for which the taxpayer withheld the tax. Now, this one you're going to do monthly, every month. So, bill properly. Your billing must be proper. Some returns are monthly, others are weekly, others are annual, provisional, final. So you bill properly. Next, we have DT 2007, income tax return for individual with employment and rental. Now, of course, employment, the employer has handled that. But now the problem is, if you have employment and other sources, you're required to furnish this return within 6 months after the end of that year. The year of income in this case is the period of 12 months ending on June 30th. This return must provide a true and accurate accounting of your personal income for the period shown. Now, I know most of you here have rentals and you're also employed, and also you're going into a tax agency. How many of you have filed this one here? How many? Ask yourself, have I ever filed? By the way, even if you don't have rental income, you're supposed to file every taxpayer in Uganda with employment. At the end of the year, you must inform URA that I was working for MTN Uganda, and the MTN was paying me this much every month. I believe MTN has deducted this and it's on my tin. How many of you have done that? How many of you here have received your tax certificate for the taxes paid by your employer? How many? Huh? Have you ever seen that certificate? Your employer, by the people don't know. This is the problem. People don't know that when your employer deducts pay from your salary, they are supposed to give you evidence. You're supposed to get that evidence that I have deducted, I was supposed to pay you 2 million. I have paid you 1.8. The 200 is here. I paid it to URA. How many of you here? You see that? Your employers do, they don't. But they're supposed to. They're supposed to give you those certificates that this was what you're supposed to receive, but you received this because we paid this to URA, and this is the evidence. Because you will need it when you're filing DT 2007. You need it. The payslip is not enough. I worked in finance for some good years, and we would deduct and I don't pay, until when URA, they came and they wanted to finish our business. That's when we started paying. The payslip is not enough. We need to look at the certificate. And that's why I like these Kenyans, because I work with the Catholic University of Eastern Africa as well. I do some lecturing there. Now, this university, they send me my certificate on a monthly basis because I need it. Remember, the rules of tax are if you are a resident, if you're a resident individual in Uganda, you pay taxes from all your sources, whether they are domestic or foreign. You get it? So the Catholic University of Eastern Africa issues the certificates they get from Kenya Revenue Authority so that I can account to Uganda Revenue Authority the taxes I paid in Kenya. Because if I don't do that, the salary I get from where? From Kenya is taxable. And that's going to be double tax on my side, which I cannot accept. You must give me the certificate. I don't know whether they do it to me and the others who are foreign, or they do it to everybody. It can also be that because I requested for it, because I need to account. I need to account to URA that I've got this money from Kenya, but please don't tax it because I've already paid the Kenya Revenue Authority. So that's the rule. My earnings from Kenya are exempt from tax as long as I have paid taxes in Kenya. So you can begin demanding, please don't fear. Just go to your boss and say, my boss, where are my certificates? Can I have them? I need to account. I need to file DT 2007. It's my obligation. So they are supposed to give you. They are there, by the way. They are there. Those certificates are there. So go and ask for them. Don't remain ignorant. You even follow the bandwagon. Everybody's ignorant. Nobody knows. Don't follow that kind of bandwagon. Pay return. DT 2008. This is a monthly return. All payee registered taxpayers are required to submit. You're going to get a lot of money from this one here. You're going to make sure you get clients for this one. You can work as many. There are so many companies in Uganda. Go and work for them. You remember what I told you, you can be an employee who only appears for such transactions. You don't need to be there every day. No, you can just be an employee, and for you only appear to file the payee. You make the payments, do the filing, and then you go. They pay your money. DT 2009, income tax return for presumptive taxpayer. This one is for those taxpayers in the category small taxpayers. They are required to furnish and submit this. It's a final one. Shall be looking at it. I think someone was asking about saloons, and someone talked about saloons here, supermarket, garages, restaurants. Okay. A scenario whereby a client has several businesses like a supermarket and a hotel, gaming as a single company. Yes, a single team, one team, single team. So these things that you've listed here, supermarket, restaurant, garage, saloon, those are small taxpayers. They're good as small taxpayers. You're going to be looking at those ones. You're also going to, when you're visiting, you move around, you're in a restaurant, do you have someone filing for you taxes? I am a tax consultant. Just now it is time for you to begin now giving out your business cards. You never know who will give you a call. Someone will give you a call and say, I have your business card. I remember we met somewhere. You told me you deal with these tax things. Can you come and we have a chat? So that's how you're going to be getting business. So small taxpayers, we shall be doing this. We shall have this full training. We shall also be talking about this monthly return for all taxpayers that are in the category that's supposed to pay excise duty. And URA is tightening the grip on these people. So you're also going to make money here. This return is supposed to be furnished by the 15th day of the following month. We shall see that. Gaming, DT 2027. This is a weekly return for all taxpayers registered under the gaming and pool betting. They are required to submit this weekly return by the Wednesday of the following week. See that? So if you have people in gaming, you have others pay, then you have VAT, then you'll be too busy. You have to resign. Actually, those who are still employed now begin preparing for your resignation because you're going to be busy. You're going to be very busy. You won't have that time of now going and you are employed and you are waking up, you're in traffic jam. You'll be working on your computer at home, filing people's returns. You just need to be serious. Just follow the steps I'm going to give you. You're going to be busy, and then you begin. You prepare to resign. Okay, prepare to resign. Then we have monthly VAT return. You're going to be busy. The VAT return 2020 2031. All VAT registered taxpayers are required to submit VAT returns for each month by the 15th day of the following month. We are going to do this one here. Then we have the diplomatic for these guys. We are going to be looking at that as well, though those clients are not so many. Non-residents are also supposed to file a return. The law provides for separate quarterly return for non-resident suppliers of services deemed to be supplied in Uganda when made to non-taxable persons. Now, you guys, you remember I told you to optimize your LinkedIn page. These guys, these non-residents, there are so many in Uganda, by the way. There are so many, and they look for these agents. They try to look for you. So if you optimize, and this guy is scrolling around in LinkedIn, lands on your page, they will send you a message. Can you do for me this? I am a non-resident. I want you to help me on the taxes. That's how you're going to get this kind of. And these ones pay well. Leave alone the Ugandans who are going to negotiate. These ones are going to pay you very, very well. So they are required, and to furnish their return, you're going to go to the quarterly VAT, this page here, click on that. You'll be taken to that page and submit the return. Then we have this new one, the Digital Services Tax, the DST. The Income Tax Amendment Bill 2023 introduced a separate direct tax in form of digital services tax on digital services offered by global companies such as Facebook, Zoom, Netflix, Google. This is charged on the gross revenue that non-resident digital service providers make in Uganda, and the rate is 5%, with the tax return submitted annually. So this is for your information as a tax agent. So these ones here, they also have their own section here, IT Digital Services Tax. So that return, you file it right here. Okay. So basically, that is today's presentation. I thank you so much for making it for today's presentation. We have seen the different taxes. We have seen the registration. We shall be talking about the tax assessments on Sunday, how the default assessments come in, how you're going to handle them, because you're going to get those clients who have received, very many of those who have received default assessments, and how do you deal with that. And then we shall move into the pay return. Okay, shall move into the pay return. Step by step, how to file the pay return, how to pay, and of course handle all those other issues that may arise. So I want to wish you all the best. I'm going to share this lecture recording. It has been recorded. I'm going to share the recording and also the materials. Thank you so much.